Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 34th commitments of Traders Report of 2025. And as we always do, we shall start off by looking at the largest changes in commercials net positions. Before I jump to the review, just a brief reminder for those who are new to COT analysis here at COTBase.com. You'll find a lot of educational material, not only in written format, but we have some very useful videos as well. If you need some further assistance, a one-on-one, I do offer consultations that you can check out. Back to our review, and let's get started. So we are, of course, analyzing the classic COT report type. I should start with that because we have 4 different type of commitments of traders reports. We have 2 data types that CFTC publishes. We've actually constructed the 3rd data type simply by subtracting futures data out of the futures and options to get options only data as well. And we're analyzing the net positions, which is the recommended data set for those who are new to this analysis technique. And as you can see, I've ordered markets based on the largest changes in commercials net positions. We have 3 main trader categories in the classic COT report: commercials, large speculators, or as CFTC sometimes calls it, non-commercials, and then we have non-reportables, who we actually call small speculators. As you can see, we have metals complex on top of our list. This is actually a unique market because here we combine all the markets in the sector. So gold, silver, copper, platinum, palladium, all this COT data is combined into one massive commitments of traders data. I'm going to show you how that looks. So basically the data that you see here is actually the combination of all of those metals markets. It may actually give us a better picture on what's going on in this sector. You can change the market category from gold to, of course, all of the sector markets and have an understanding. Now you can see there's an all-time COT Extreme and small speculators. So all-time meaning never in the history of COT data have we seen small speculators at these levels. It is an unquestionable bearish extreme, actually, so something we should keep our eyes on. Now, that being said, of course, it does not mean that we're going to see metals just suddenly fall from the sky right now, but it's definitely showing us that there's a COT extreme that's being built up gradually, week by week, and it is a bearish COT signal. Moving on to our next market, and I should say the first market for the review. This was just kind of an explanation on what complex data is at COTBase.com. So if we open soybeans in a 1-year chart, we have a chance to examine this 12% change in commercials net position. So we're analyzing the commercials data set here. That's represented with this red line. So we can actually take off large speculators for the time being. It's definitely greater than average, but just slightly. So I'd say these type of changes in soybeans seems to be more regular than not. It is pointing downward, suggesting weakness in the near term. And if we switch over to a 5-year chart, let's put large speculators back on the chart, we can see that the current net position of these traders, so both commercials and large speculators, are not really showing an extreme that is worth mentioning. So more or less in between the two. I'd say the most bullish extremes over here and the most bearish extremes from 2020. We're in between those levels. So to be very fair, I'd say there's not much going on in soybeans when we are talking about the COT report. So let's just move on and have a look at a different market, although not too different because it's another soybean market. It's soybean oil. 12% change over here, but in the opposite direction. Once again, we are talking about a slightly larger than average change size, suggesting some strengthening in the next few days. Switching to a 5-year chart, Where traders are currently is more or less in between the two major extremes, so very similar in that sense. You can see that we had a relative bearish extreme not that long ago. When I say relative, it means like the last few years, I'd say. If you compare this reading, it's more bearish. If we take this, let's say, between 100,000 and minus 100,000 levels, it's kind of reached that lower limit not that long ago. That was a bearish COT Extreme pushing the market lower. But overall, in a 5-year perspective, then you can see that we can definitely reach much greater extremes in both directions. Moving on to gold, here we have an 11% change in commercials net position. So once again, slightly larger than average change size, suggesting some further strengthening in the next couple of days. The COT Extreme situation is actually quite healthy for those who are interested in higher prices, because there's not really an extreme in either of these trader categories. So it simply suggests that this trend can continue on. Moving on to large speculator COT Extreme analysis, we actually have two crude oils in the analysis here, Australian dollar in between. So WTI is our first 776 report extreme in large speculators net position. So I opened up an entire history of data. So that's been quite a long time. Back in 2010, when we had similar readings in net positions. You could also see that overall in this time horizon, we are at bullish COT extreme levels. But if we go back before 2010, we do find periods of times when the extreme was even greater. So that just suggests that caution is advised. We could see greater COT extremes in traders' net positions coming before the market actually reacts to the signal. And of course, this is a bullish COT extreme, so we would expect crude oil prices to go higher in the medium to long term. The next market is a currency, the Australian dollar. Let's go back to the 5 years chart. So it is a 69 report extreme, so basically a little bit over a year ago since we've seen these levels. On the 5 years chart, however, it does show that this is a more significant extreme territory, this 100,000 contracts net short for large speculators and 100,000 contracts net long for commercial. So let's see what happened in the past. So the last time we were in similar territory was back over here in 2024, roughly at this bottom over here. The market, the Australian dollar, actually rose from those levels after the signal. The one before, again, a similar reading from September of 2023, preceding this bottom, after which the market has gone higher. We had a longer period of time for this bullish reading back over here in 2021. Once again, the market reacted and went higher from those levels. So I would say that in the case of the Australian dollar, and I'd say generally with currencies, COT data analysis is something that we would consider to be efficient. Last but not least, we have crude oil, the Brent crude oil to be specific. Here we have a 24 report extreme in large speculators net positions, so that's not really something worth mentioning. And the extreme is not as clear or obvious as what we saw in the WTI crude, a bit different. So not an extreme that I would mention at all. Now, I'm not going to say goodbye just yet, because I was actually mentoring somebody just today, and I thought I'll just give you a sneak peek on how the S&P looks on a 1-minute candlestick chart with the wonderful iCOT Intraday Indicator. I would say it's been doing pretty well. You can see that with proper settings, you have plenty of opportunities to take advantage of the signals coming from this wonderful COT-based tool. It's not directly COT data, but something that we developed after many years of research. So you can see, for instance, over here we have a sell signal from the system. We are already in a beautiful long, supported by this green stop line. So we are in the trade. However, around here, it suggests we may have reached a top. But you can see that there are actually times where you can actually trade both sides. You can go long after a buy signal, maybe taking some patience and waiting for the market to come back to this stop line, and then basically trade the stop lines. There are other great examples. You have another sell signal. What I enjoy or really like to see when we have a signal at the stop line. So for here, for instance, we have a buy signal. We have the extreme coming from large speculators just around the buy stop line over here, the bullish stop line. And just when it dips under the stop line, mind you, this coincides with the 5-minute stop line over here. Then that is actually quite the coincidence, and a very decent good opportunity. So you are looking at a 1-minute candlestick chart. However, the trade may be supported on a 5-minute time frame, right? Another great example over here, and this, by the way, is actually a signal on the stop line on the 5-minute chart. So when you have multiple time frames with coinciding signals, that can be actually quite the powerful collaboration to have. So this is just something I wanted to show you, the power of the iCOT Intraday Indicator, because if you're new to this channel or you're just checking out this video, we are a service built around the commitments of Traders Report. However, we don't only focus on the classic COT report, but we've actually developed our own indicator, the iCOT Intraday Indicator, that will help you on shorter time frames. We have some great explanation videos and charts, but basically you can see we have speculators and commercials underneath the price chart. We actually call these lines the iCOT scores lines. And then we have the different signal types on the chart. When we have commercials at extremes, that's represented with a diamond above the candle if it's a sell signal, or below the candle if it's a buy signal. When we're talking about speculators extremes, that's actually represented by the candlestick itself changing its color from green or red to blue. And when we have both of these happening at the same time, then we are talking about a very strong signal type. We call it a stripe signal, red indicating a sell signal, green for a buy signal. So these are the different signal types that we have. We have a bunch of great charts here for you to go through. Mind you, if you have any questions, feel free to comment underneath the video, or simply send us an email to info@cotbase.com. If you have not yet subscribed, please consider subscribing to our YouTube channel. That would be greatly appreciated. Thank you so much for your attention. I wish you guys a wonderful weekend. Take care and goodbye.